All right, good day, everybody. I'm Jim Paley, and we're here for Payroll Tax Compliance, year 2020 and 2021. Talk about what's happened in this year and what's going to happen next year. So again, I'm Jim Paley. Many of you probably know me. I do this every year. I presently work as compliance officer for MyPay Solutions. We do compliance, licensing, bank relationships, risk management. I've been in the payroll business for over 40 years. I used to be president of the American Payroll Association. That's an elected position. I'm on the board of directors, executive committee, and so forth. I'm also a member of the board of directors for the Independent Payroll Providers Association, IPPA. I just rolled off as a member of ERSAC, where I was chair of the SBSE, Small Business Self-Employed Subcommittee. That's interesting because I can share some things that we did. We were on a complete need-to-know silent basis, but that has ended, so I can tell you some of the things we worked on that are making news this year. Do a lot of these, and we'll just move on. And so I always have to have a disclaimer. In payroll, especially this time of year, things change daily, hourly. Of course, we probably all are looking forward to the election. Interestingly enough, that's going to happen about the time that this is actually going online. I don't think much is going to change, but we'll see what happens. So I keep talking about updates. I have a website, jimpaley.com. You're welcome to go out there anytime. I update that continuously. It'll be updated daily, weekly through December. A lot of things change. In this age of this year, 2020, that I think everybody wants to forget about. Things are coming out slow and late. People have acclimated to working from home pretty well, or working remotely. States, government, not so much. So some of the things that you would normally have in the bank now as changes haven't happened yet. Announcements for rate changes, they're coming slow, although they are coming. This material today is effective October 16th. Again, go to my website. It'll be updated continuously if you're looking for the changes in rates between now and the end of the year. We're going to understand the latest reform items, discover IRS new initiatives, and there's a few of them. Topics related to 2021 and tips for year end. We always talk about ordering your W-2s. Make sure you order them. W-2s, for instance, printing W-2s is going to be interesting this year. No one ever thought this was going to last this long. A lot of companies have gone to paperless and remote processing. W-2s, on the other hand, still in a lot of cases are paper. Just to give you an example, if you have an employee that agrees or wants to sign up and you have a way to do this, to do paperless W-2s, the employee has to agree to that on a platform that the W-2 is going to be sent on. That still gives most of employees getting paper W-2s, so you're going to have staff. Now, payroll is essential, so many of you are in the office. Some of you are not. You just have to figure out how you're going to get those done. So, a lot of things to talk about. The agenda ranges from the Trump budget proposal, employee deferred FICA we'll get to, first time abatement, COVID legislation, items like that. EFTPS confirmation emails that started last year, that's still highly encouraged that people sign up for their own PIN companies. You have a PIN if you're an RA, a reporting agent. You have a different one if you're a batch filer that sends payments in, but the client can also get one. We're going to talk about all the other items that are listed on here, and there's slides for it. So why do we talk about Trump budget proposal? Who knows what's going to happen in a short period of time. But for the last couple of years, if you've been around in payroll for a long time like me, there was something called a 941 Schedule A. A 941 Schedule A was an employee listing of wages paid to the employee that were subject to FICA every quarter. That's why you have a 941 Schedule B, because an A did exist. Many years ago, it was eliminated for annual reporting only, and they gave quarter credits based on the W-2 amounts. The federal government wants information on employees' pay more rapidly than annually. We all know that they changed W-2s to January 31st for filing. We also know that 1099 NECs, which we'll talk about in a little bit, are now out this year, January 31st. But the government wants to get more current wage information. So there is a proposal that's been out there for a couple of years to make wage reporting quarterly. You have enough to worry about today. Don't worry about it. Just keep it in the back of your mind. If you hear about it, it may come back. What is happening is modernizing the IRS. You always wonder why the IRS systems are never hacked. The IRS systems that they use are standalone. Some of them even still use key punch cards and punch paper tape. The IRS is having difficulty getting programmers on staff now that know the old basic Fortran COBOL language that a lot of the systems are still running on. So there is a project that's underway, a 10-year project to modernize the IRS. It started in 2015. They expect to be completed in 2025. We had several demonstrations and presentations on this. Interestingly enough, most of the people in the government that are on this program are going to retire in the next couple of years, so they won't see it completed, and by 2025, they will then be at 2015 technology. That will probably be outdated at that point, but at least it's not like 1960 technology, but it works, it's secure, but it does limit some of the things that we'd like to see. E-Verify. Many states require you to e-verify your employees for right to work. The federal government wants to do that and wants to take it over and has wanted to take it over for a few years. You can e-verify yourself today. There is a website you can go and do this. You can bulk e-verify people, but it's not an easy process. They want to come up with a way where employers can easily send in new hires and their full staff for e-verify. That hasn't happened yet. Paid leave, I'll hear about that, and we'll talk later about that, because what happens is when the states wait and wait and wait for the federal government, and it takes too long, the federal government then doesn't do anything, so the states do it themselves, which is why you have many, many states having their own paid leave and are all different. New hire reporting, it's state. In Canada, it's federal, and it's called LOE, which is leave of employment. You want to track your new hires, and I got a slide on this in a short period of time that's going to talk about this, especially with what's happening today with COVID. Federal government wants to take it over. They want to take it over for quite some time. It hasn't happened. Healthcare reform. By this time next year, something will happen. But again, it's another thing. Don't worry about it, because things are as they are for this year. Parental leave, same thing, just like paid leave. Federal government wants to put in mandatory parental leave. hasn't happened, so the states are doing it themselves. So let's start talking about employee FICA deferral. You know, when this came out, we on our IRS committees talked about, okay, so it's a deferral. It's not a waive, so it's not free. It has to be repaid. And we said, okay, why don't you do this? Why don't you make it as a deferral and then put it as a repayment on the employee 1040 in 2021 for the tax year 2020? That would have been too easy. It seems like every time the government wants to do something with taxes, it's like, oh, let's put it on the 941. Okay. So this was very confusing, but it was pretty simplified. The employer chooses whether or not they want to offer this, yes or no. They can, if they say yes, make it optional for the employee. They don't have to. They can make it mandatory. Fast forward to the federal government employees. Every federal government employee is on the deferral as long as they make less than $4,000 in a biweekly period. Government doesn't know what a weekly is. That's okay. So you just do the math. And it's pre-tax wages. That was a big question. Is it gross? Is it true gross? Is it sub-gross? That's pre-tax. So you take the 401k, the 125s out. So you can do that. Most employers that I have talked to and polled are not doing this because no one knows what's going to happen. Because as it stands right now, in effect, you have to double the FICA, but it's not 100% accurate. Okay, you have to recollect it, and of course, the government doesn't do it easy. Their repayment period is 4 months, so it spans another 2 quarters. There is another new 941. I have never seen this in my lifetime. There has been 3 941s in this calendar year 2020, and there's going to be another new 941 for first and second quarter next year, and then another new 941 for third and fourth quarter next year. There are 2 lines that are reserved, line 24 for third and fourth quarter this year. If you defer, if you don't defer, you don't need those lines. If you defer, then you need lines 25 for first and second quarter next year. Okay? This is going to drive software companies crazy. What do you do with employee terminations? So, personal statement again. Had they done this on the 1040, it wouldn't have been an employer issue. Since they did it on the 941, you have to figure out how you're going to deal with it for the W-2s in the 941s. I mentioned W-2s because what are you going to do on the W-2? The final W-2s for 2020 are out. The instructions are out and everything. However, it doesn't address this. And we're still waiting for the IRS to address what you're going to do. What are you going to put in box 3 and 4? Are you going to put what should have been taxed for box 3 for the gross wages, subject to FICA? Or are you going to put the reduced amount? If you put the reduced amount, what are you going to do next year when a person exceeds the FICA wage base but had a deferral in the prior year? If you do the math and you put the total gross subject to FICA in box 3 and then the amount that was withheld in box 4, and the employee then does their 1040, it's going to automatically charge them what they were underpaid, which is wrong because they're going to repay it on on payments made in the first and second quarter of 2021. I know that's confusing. It's going to be explained. It has not been explained by the IRS yet. They haven't figured out what they're going to instruct employers to do. It's getting late. If you're deferring, this is important to you to try to figure out what they're going to have you do. If you're not deferring, you can just sit back and say, not me, but see what happens. Now, they have to do something big because, remember, I said all federal employees are doing the deferral. So just wait and see. We just have to wait and see. So there was also talk about making it waived. So there is a bill to make the employee Social Security tax zero from 9/1 to 12/31. If they do that, then this becomes actually a gift that doesn't have to be repaid. It's a proposal. It's not been put into play. Self-employed individuals also included in this. All the talk is Social Security is going to go bankrupt. Well, in this bill, they're going to take the deferral amount and take it from the general reserve to fund Social Security for what was offset. So that would be protected. Now, what happens if a person didn't defer? If they pass this, does the person then just, well, you didn't go in, so you don't get it? Probably not. It would probably be reconciled as a credit next year. Oh, please, don't do it on a 941. Do it as a W-2 item on a 1040. But we just have to wait and see. Nothing has been decided yet. This is something that every employer just keep an eye out for. I will keep a very close eye, and I'll be reporting on it during the year next year. So we'll just have to see what happens with that. So here's the 941 that we have today. You can blow it up. This presentation is available if you want. This is what you're using anyway. So there's a box 24 and 25, which is there mostly for next. Or 25 is there for next year. You know, the 941 one from a nice one-page with a signature section. Now it's a 3-page form. They do much more to this. It's going to become who knows what it's going to be. It's going to become a book every quarter. There is a draft that was presented in September. The draft is for interestingly enough, so the draft will take place for the third quarter, which is ended now. But again, there's going to be another draft for the spring of next year in order to figure out what's going to happen with the repayments. You can see all draft forms. There is a website, irs.gov draft forms. You can go out there anytime and see what they're working on. If it's not in the actual form inventory, go to the draft and see what's out there. You can sort it by date. You can sort it by form. It's all forms, including foreign income and items like that, and corporate forms. But you can narrow it down if you put the form number in. So, changing a little bit here, let's talk about first-time abatement. This has been discussed in the reporting agent form, it's called RAF, for several years. We discussed this in ERSAC for the last 3 years. There is a one-time get-out-of-jail-free card that everybody, and I mean everybody, this includes individuals, it includes corporations, can use for penalty relief. Supposed to be automatic. If you have paid all your taxes on time for the last 3 years, all your tax returns have been filed timely, Even if you have a past payment and you've arranged to pay, it counts. But there's also something called reasonable cause. I'm asked a lot about reasonable cause. So when you get a penalty notice, let's say the penalty is $50. And then you have a penalty notice for not filing your 1095s on time. If you have over 50 health insurance people, and that penalty is $100,000. Remember I said there's a get out of jail free card. You don't want to use the $50 penalty as your get out of jail free. You want to use the $100,000. You don't have that right. The government decides. There's something called reasonable cause. People have always asked for what's the definition of reasonable cause. The government on purpose does not define reasonable cause. You can use the same reasons word for word on one penalty with one company and the same type of penalty on another company. One company gets a reasonable cause, the other company does not. That's the way it is. The government wants to keep it that way because they don't want to be put into a corner for automatic reasonable cause based on words that you use. We've been talking a long time about letting the employer decide when to use the first time abatement, what to say for reasonable cause. They will never define reasonable cause, but we're still working on what to do with first time abatement. We have discussions every quarter with the IRS on this. Now, interestingly enough, the IRS continues to change people's jobs. So about every 18 months, there are different people in charge of this area. So that could be by design too. So if people know me, I kind of laugh about things from time to time. But it's there. Service bureaus a lot use this. Right or wrong, they can use this. They make a mistake. If the client has no first-time abatement, you can use it for that penalty, and it's gone. It's just around. So keep an eye out for it. You get a penalty notice. If you're down the road where you don't think it can go away, and they haven't automatically, you'll know automatically because you'll get a statement on the client, and the statement will say, you have a penalty for $1,346. Penalty has been waived. Doesn't tell you why, but that's the reason they used the first time abatement. First time abatement works one time and for one penalty only. So if you make a late payment and it spans 2 quarters, you don't get to choose which one it is. The system does, and it'll take the first one only. Unfortunately, normally the first one's a small number and the second one's a high number. But you understand the federal government budget. It's the only entity I've ever seen that spends money based on anticipated revenue. You try to pay your bills that way. You tell your credit card company that, well, I anticipate getting income next month, so I'll pay you next month, or I'll with anticipated money. Well, you can't do that. The government can. So they're not inclined to reduce penalties too much. Additional items, we talked health reform. We're going to talk about many of these things here in a couple minutes. PATH Act item, I do want to talk for a second. There still is that waiver for correction. If the gross wages is less than $100 wrong and the federal withholding is less than $25 wrong, you don't have to fix things. States do not agree with this. So normally you fix it anyways, but it's still there. Other things like that we'll talk about in a minute. So the IRS has updated their authentication procedures. You may have come into play with this. When you call for a notice on a company, in certain circumstances, you have to identify yourself and your social security number. We had a lot of discussions on that with ERSAC, saying that's not very secure, even if it's just verbal, because people can overhear. IRS says they don't care. If they ask you to identify yourself, including your social security number, you have to do this or they won't talk to you. They need to identify you and your authentication that you can talk on behalf of the client. So that's in there. You may have run into it. All right, this is a big one. So you may have watched the news over the last 12 months. In the payroll industry, there are lots of good people. There are a few bad seeds. There was one significantly in upstate New York that was a bad seed. Company is no longer. But what the outcome of this is, so if you get a client that NSFs on their payroll to you, and you do all the banking, and you're hit with the payments, some payroll companies use that as a payroll should have never run and have done recalls. You can do a recall within 5 days. However, the employee is the innocent party. And NACHA now, and this is final, because about a month ago it was proposed, but it's final. So there are only certain now written rules as to how and why you can do a reversal. Before, it was guidance. Now it is hard-coded. You can do a recall if the client tells you they shouldn't have paid the person, they paid the wrong person, the payment was the wrong date. You have to keep record of that. But you cannot do a reversal based on not getting paid. Very strange here. So the enforcement of this is effective January 2nd, 2021 for the fines. And this is not a typo. The fines can be $500,000 per occurrence. The definitions of reversals take place June 30th, 2021. It's a little strange, but my recommendation is immediately do not do a recall based on not getting paid. You're going to have to take another method to get your funds paid for. You cannot do it as a recall out of the employee's bank accounts for, like, for instance, direct deposit. NACHA is encouraging payroll companies that actually do money movement become NACHA certified. It is something that's out there. You may want to look into it. I don't know if you want to go to that level, but either way, it doesn't hurt to become a member of your local NACHA. There are local, they're regional NACHAs now, and they're under the umbrella of the national. So you may want to go out and look at that and possibly become a member, because you want the rules. If you're actually becoming a money mover, it's something that you might want to look at. It's nice to be a member because there is a rule book that you can get. So it defines what you can and can't do, and you become a friendly to the local NACHA in case there's a question or you need to talk to somebody. They're very nice. Something you might want to look at. It's not, becoming a member is not that expensive. Becoming certified is a little more expensive, but becoming a member is not bad. You may want to look at that. So this talks about missing identification numbers. So the IRS is sending out incorrect tax ID numbers. They've done this for accounts payable for many, many years. It's now happening to W-2s. It was 1099s. If your clients get these, we asked if these could come directly to the Service Bureau, a reporting agent, rather than directly to the client. They declined that, or at least do it together. Your clients should not ignore these. They have to look to make sure that the Social Security number that's on file that they're reporting on is correct, and they have to show reasonable cause that they tried to correct it. So the one thing is, you go to the employee, did you give me the right number? Show me your Social Security card. You can copy a Social Security card. Don't let anybody tell you you can't. You can make a copy of a Social Security card and put it in your file to make sure that you're filing the right number. It's very easy to make a mistake. It's very easy for the employee to tell you a wrong number. I've seen people that have wrong numbers for 20 years. They're not checking their Social Security bases either. There's tons of money in the unreconciled account, and there are things that they're looking to try to correct. It's not that onerous. It's just something that should be done routinely. And I'll tell you in a minute why it's even more important. I talk penalties. These penalties are real. Okay? If you're more than 4 months late, it's $280 a return. That's why these 1095s, these penalty notices, can be in the hundreds of thousands to $1 million. It's $280 a return, double that, because it's the amount of money you give the employee on the form and the money and the return you send to the government. So if you don't do a return, these are twice. It's both the employee copy and the employer copy. These numbers are real. There's something to make sure that you're on top of your penalty notices. This is coming up. The COVID pandemic slowed this down. This was announced back in the summer. So if you have a hack, or you electronically give the wrong person a Social Security number or any PII, personal identifiable information, there's things that come into play. There can be credit monitoring, items like that. The IRS is putting in a procedure where they're going to mandate within 24 hours of this happening that you report this to the IRS. It was supposed to go into play in September, and it got delayed because of the working from home. Now it's supposed to come in November. It's publication 1345. The rules are in there, but it's going to include payroll processors. They don't today have a mechanism other than sending them a spreadsheet, which, by the way, is emailing PII, which is not ethical either. So they're going to come up with an online system where you report this. They want the security incidents reported within 24 hours of you identifying that it happened. So they give you a little leeway to that. But keep an eye out for that. There'll be a quick release from the IRS when this does become mandatory. It's in the code today, but it's very difficult to try to comply with this. And they know they got to come up with a better way to do this. And they've been talking about this now for 3 or 4 months. So just keep an eye out for this. It's not today, but it will be coming. And if you listen to me, you'll hear it from me when it becomes total law. This has happened very quietly. You probably know that if payroll taxes are not paid, they're called trust money. Trust money means you're deducting dollars from someone, and you're entrusted to remit it to someone else. Okay? Employee FICA, employee federal withholding is trust money, subject to 100% penalty if it's not paid. Always went back to the original company. There's a whole bunch of different tiers as to who's responsible for this. The PEO industry, professional employee industry, which used to be called employee leasing, the IRS put something called in a certified PEO. They made the liability transfer to the certified PEO, but payroll service providers were never mentioned in this trust fund recovery penalty code. They have now quietly put in payroll service providers into this code. Right? For most all of us, 99% of us, not an issue because you always pay the taxes. But do understand that the federal government is now looking at the payroll service provider as another mechanism to get monies if taxes are not paid timely. Gig economy. Something to look out for. You may have at some point a new marketing area to go to, because today there's W-2s, there's 1099s, 1099 MISCs, 1099 NECs, DIVs, PATRs, and Rs. There's also something called a 1099K. That's for the gig economy. The gig economy includes people like Uber drivers, Lyft drivers, Airbnbs. I live in Ann Arbor, Michigan. People that rent out their driveways and front lawns if they live close to the stadium, and then park cars for 50 to 100. Actually, if you bring an RV to the game, it's $250 to park the RV. That income is not reported now. We all know about sales tax, and it was something called use tax. So if you bought something on Amazon or eBay and they didn't charge sales tax because the seller wasn't domiciled in your state, you were responsible to pay use tax to the state. Yeah, well, that never happened. The government says that these Uber, Lyft drivers are still responsible to pay taxes even if there's no tax return, because a 1099K includes $20,000 of income and 200 transactions. Most people fall under one of those two, so they don't get any statement. There was a group that came out that said there's $2 trillion of unreported income that's not being reported or taxed. Federal government is aware of this. They were supposed to come out with rules early this year, and that all stopped. But they are looking at this again to see if they want to change those rules, because if you don't report it, you're not going to pay taxes on it. Let's be honest here. So keep an eye out for this. I will be talking about this, and when and if this does come, there is a business opportunity because someone's going to have to do these forms. We know how difficult it is to process payroll now. This old days of one-right payroll systems where employers do their own payrolls and payroll taxes, it's gotten so complicated that you have to use someone to do your payroll, even if you have one person, because it's gotten complicated. This is another area where there is some potential marketing opportunities. The W-2 is out. We all know the dates for states are generally January 31st now. There's a few that are still different, but you might as well get all your work done by January 31st so you can go to maybe the Caribbean in February if we're going to go there next year. But everything's January 31st. There is talk. Okay, so can you truncate the Social Security number on the W-2 and only show the last 4 digits on the employee copies? The answer is yes. All 50 states, because there were a couple of holdouts, all 50 states allow it also. It is the employer's option to truncate the Social Security number on the employee copies. Of course, not the file copies, because you got to show the whole number, whether you're electronic or paper. but on the employee copy, because the 1099s have been truncated for many years. Now, I said before on the correction of TIN numbers, which is taxpayer identification, which includes Social Security numbers. What is the only form that you give to your employees every year where they can verify what number you have on your system equals the number on their actual record? It's the W-2. If you truncate, I'm encouraging it. There's nothing that you give your employee that shows the whole number anymore. So my recommendation, if you do truncate, have another method to make sure that the number you have in your system is the proper number that is correct. The rest of the form really hasn't changed much, even with all the things going on, although box 14 is just a mess. Why do I mention box 14? Okay, so they drop everything on payroll. So if you were involved in the emergency family leave, the COVID 2-week payments, subject to the 511 limit, subject to the $200 limit, you have to show those amounts in box 14. The original W-2 instructions said you have to spell it out word by word. Well, okay, let's go back to the W-2, if I can figure out how to do that. I'm not going back. Let me see. But so if you can go back to the original W-2, box 14 is tiny. You would have to have like a 0 font or 1 font size in order to show it. The government is allowing you to abbreviate, but they're not telling you yet exactly what the allowed abbreviations are. Most payroll companies, it's getting late, are just deciding what they're going to do. But you have 2 ways of doing this: on box 14, or give them a separate form that says what it is that's in box 1, 3, and 5 that are part of these items. I suggest you abbreviate somehow, and then make the employee understand what the abbreviations mean. We all were talking about the W-4 last year. We were all hoping that it was a bad dream and would go away. Didn't go away. The 2021 W-4 is out. You can still use a prior to 2020 W-4 if that's what you still have on employees. So you have to keep multiple systems because that has marital status and number of exemptions. Now there's no such thing, but if you have a change or a new hire, you must use the proper year form. And you hired somebody on January 2nd of 2020. Did you have to use the 2020 W-4? Yes, you did. You could not give them a 2019 form. How do you know that? When you go to the bottom of the form with the dates, it has to be the right form. And the same thing with next year. The next year's form just looks like the 2020. The only thing that's changed are the bracket limits for wages as to how you're going to do that. There is an estimator. There's an estimator for the employee. There's an estimator for the employer to determine what the difference is from the old way to the new way. Percentage is still not allowed. You can't say take 14% of my wages for federal withholding. It must be a valid W-4, which now, instead of marital status and number of exemptions, is marital status and what your deductions are, what your income is. Flat dollar amount additional is still allowed, okay? And you can do that. So there are several states that don't have W-4s. The question is, what do you do if, so when all this changed, there was always state W-4s. But when this new federal form came out, states that didn't comply with the new federal way had to make sure they had their own state form. But there are still 6 states that don't have state W-4s. Pennsylvania, one in particular, because that's a flat percentage. You don't have to worry about it. But what do you do if the employee doesn't give you a state mandated W-4? And I have a list of the states and what you're supposed to do if you don't get one from the state, because many states kept the old way with exemptions. So now you got federal one way, you got states a different way, but I've given you a list of what states and what they require if you don't get a valid state W-4. For any one of you that files returns, 941s, 940s, there's something called a PTIN. PTINs several years ago cost up to $100. They found that unconstitutional, so for 4 or 5 years, it was free. There was actually a case whereby you were going to get refunded for what you paid. That never happened because the federal government said a third party handles the payment, so we're not responsible for the repayment. And most of these third party companies that handle these are no longer in business, so that went away. You're not getting your money back. Well, now PTIN renewals cost $35.95. Even today, there was a notice by the federal government, make sure that you're applying for your renewal of your PTIN. It's easy, it's quick. They don't take American Express, but they do take Visa, MasterCard, Discover, and e-check. But make sure you pay it. The federal government gets $21. The contractor, I don't know who that is, gets $14.95. It's one transaction. But make sure you do it. It's easy, it's quick. Do it online. It works. I've done mine already, and it's all done. Okay. So the federal government, in their efforts to get income reported quicker, changed last year and wanted 1099 MISCs if you used Box 7 to be submitted by January 31st. And anything else was still the old way. Prizes, awards, royalties, things like that. The federal government had a problem. They couldn't record a form that had 2 different due dates on the same form. So they resurrected a form that was out there in the 1980s called a 1099 NEC. Now, our ERSAC group said, okay, if you're going to put it on a separate form, okay, but let's keep the geographic part of the form the same so it makes it easier for programming. Yeah, no, they didn't do that either. So it's Box 1. There's an item here that's very confusing, but it's correct. If you have non-qualified deferred comp on an employee, it must go on both the NEC and the MISC. I don't know how that's going to reconcile, but that is mandatory. But Box 1 is your old Box 7, non-employee compensation, which is subject to double Social Security for the recipient on their 1040s. Not your problem. And this is now due January 31st to the employee and January 31st to the federal government. It's just a different form number. Most systems have already programmed for this. Do you ask a question on states? The states lately have been responding on this. We're members of NATCP, and it looks like every state is taking a 1099 NEC also. So you don't have to worry about that. MISC, it's still there, but Box 7 has changed. As you can see, it's no longer non-employee compensation. It's now your direct sales, which is like your Mary Kay person that's running a business as in the second entity. The rest of the form hasn't really changed much. There's your 1099K. I bring this up just to keep an eye out and keep your eyes peeled. If they change this threshold from 20,000 and 200 transactions, there may be potential business opportunity for us in the payroll industry because somebody's got to do these. I will tell you, there's a huge lobby. The Uber, your Lyft, your Amazons, your Airbnbs are lobbying against this because they would have to, their reporting would skyrocket. They don't want it. So just keep an eye out. It is a good way to balance Social Security funds, though. 2021 1099 MISCs and NECs, the draft is out. I just find that very interesting that they've already put next year's draft out. Who knows what's going to change in tax laws. So with COVID, you have new hire reporting. You hire a person, you got to send the new hires into the state. Individual companies can do new hires to one state. Payroll providers cannot. They have to do it to each individual state. What do you do with temporary layoffs and bringbacks? I have 2 slides by state that tell you what to do. Do notice that most states, except for people like Florida, Kentucky, Illinois, say new hires and rehires. They want to track these people when they're getting paid for child supports mostly. Doesn't do any harm to send rehires in anyways, but these are mandatory for rehires for many states. You can see them here and all the states are listed. So, you know, the old way of doing business where everybody comes to the office is gone. People are working from home. Home can be in a different state. Home sometimes could be in a different country. So what do you do? Well, very little known law is that where income is earned, it should be taxed there. So several states said, okay, during what's going on here, if temporarily the person lives in Ohio and works in Michigan, they have reciprocals, don't worry about it. New Hampshire just filed this lawsuit against Massachusetts because Massachusetts says, no. We want income anyways. We want to tax it. So there's a whole list of states as to what to do. Now, I will tell you that this changes daily. So I encourage you, if you have employees working in states outside of where they're normally worked and normally taxed, keep an eye out for state changes on this because these change all the time. This, what had happened, it was never supposed to go along this long. So states had said, don't worry about it for now. They're changing their tunes. So just keep an eye out for this. But you become nexus in states that you never thought you would. I list the states with reciprocals. Most states you have to file the employee has to sign a special form for the state in order to do reciprocal taxation. But keep an eye out for the reciprocals and you're working from homes. And we'll see how long this goes. Some of this is becoming permanent. Some companies are saying we're going to go remote indefinitely. I'm remote now until mid next year. Now I work in the same zip code that my home is, so it's right down the street. So that's no big deal. But keep an eye out for this. It does affect many companies. This is a time of year where everything changes. Wage bases, rate changes, so forth and so forth. There are changes that we know about now. The FICA wage base did change to 142.8. There was a 1.3% increase in benefits. That math doesn't work. Years ago, it would work. You would always know when they announced what the Social Security increase payment was. You could do the math to figure out what the FICA wage base was going to be because it always came out the next week. Yeah, not anymore. It's 142.8, and there's a mid forecast if you want to see. It's just for budget purposes for the prior years. 2022, because it was 141 something proposed, so it's pretty close. But it is 142.8 for next year. Again, if you did for the 4 months of FICA free, you're going to have to worry about that next year. This slide is outdated every time I talk. Okay? These are the rate changes for next year, but if you go to my website, you'll see more states as they come out. Vermont is the only state that's reducing, that I've seen so far, that's reducing their wage base for next year from the year before. All the other states increase, and you're not surprised with all the unemployment. But the federal payments, the federal government assumed the liability for that. That wasn't transferred to the state for deficit periods. So it's only the state, but there's a lot of, we all know that the states have paid out a lot of unemployment. You always wonder why people like New York, you never get your rate until March. Massachusetts was actually April one year. Most states use June 30th as their cutoff date for rates and bases for the next year, but some states use December 31st. And for instance, New Jersey and Tennessee do split years. So they change July 1. So you'll see that. You can make voluntary contributions. You can do that to reduce your, why would you do that? You're going to have big growth next year. You're going to have a lot of new employees, and for a small payment, you can reduce your next year's SUI rate by up to 0.2%. It's an easy calculation. You can go to the state website. When it's paid, notice not all states are on here. These are the states. You have to have, a state has to have individual company fund balances to allow this. But it is something to look at for budget purposes if you want to look at to see when you're, if you can reduce your rate for the next year. You have to get these in by certain dates. It's not use it or lose it, but it doesn't reduce your rate if it's late. On-demand pay is a big thing that was supposed to be talked about, and the IRS is putting out guidance in March of this year. It still has not happened. That has to do with people wanting to get their pay quicker than normal pay date. So the question is, when that payment is made, it's constructive receipt. Is it taxable when paid? The federal government has been quiet on this, and right now you don't have to worry about it. You record it in the next pay period. The government is looking at this, and they want to put out legislation as to when it's going to be taxed in writing, as to whether it's going to be taxed with the next pay date or when paid. I'll give you an interesting enough. The IRS last fall said, well, we think this is what we're going to do. We're going to make it paid or taxed next pay period. And I said, okay, except if it's paid in the last week of the year. I said, remember I was chair of SBSE. I said, you can't do it both ways. I said, there's no way to program that. I said, you got to go one way or the other. So they took it back, and they're talking about it. So wait and see. Nothing's happened yet. So right now you're okay, whether you pay it or a third party pays it. Now the big question is there going to be enough income to take it? And what do you do with deductions? What do you do with child supports and wage assignments and garnishments? You know, but right now you can just close your eyes and say, I didn't know about it, and just record it with your next pay period. EEO component 2, that's out. That's your larger employers, where you have to do a lot more reporting. Federal government keeps wanting to do minimum wage changes. They don't. It's always the states. Work opportunity tax credit, they want to make it permanent. They've wanted to make it permanent for the last 30 years. Same day ACH went to $100,000. Now there's something called real-time payments. Nice thing that it's outside of the NACHA ACH system. Some banks are offering that. I did a test with our bank. I got my payment of $10 in 15 seconds. Nice thing for like for instance, California is not the only state. There's many states that you have to pay your person when you terminate them immediately. Same day ACH does work. Years ago, you had to pay send a person home with pay until you can get them their final check. And a state mandated sick pay and state changes. So state mandated sick pay, remember I said federal isn't dealing with it. So the states, this is a list that was current a couple weeks ago. The important part is the states that are considering mandatory sick pay, keep an eye out for North Carolina. The problem is everyone's a little different, but most computer systems can handle this. You can always have more than the state. You don't have to make any changes. If you have less than the state, you have to make changes to your system. Pay cards are fine. You can't make pay card your mandatory way to pay a person, but pay cards are okay unless you're in New York. There was a huge suit against this change, so it was stayed for a while, but now it's back in and it's final. If you give a New York resident a pay card, this is like a pre-note. You cannot deposit the person's net pay into that pay card for 7 days. I don't know why, but that is in play, and it's final. Again, it was protested, so it was suspended. But now the New York State Supreme Court said it's fine. There's other rules to it, the same as the other. People have to have a way to get their net payout with one pay without a fee. That's all the same. Exempt, non-exempt, did make a change. It went from it was going to go from $250 to $1,000, close to $1,000. They stayed that. It's in play now. The salary test is 684. Highly comp is 107,432. The duties test didn't change, although keep an eye out for that because the federal government, Federal Department of Labor, wants to tighten this down. So it's not really here, but just now, I want you to know that the state of California Supreme Court just ruled that Uber and Lyft drivers are employees. Final. There is no appeal at this point. So you're going to see a lot of things happening in that arena. That gets to your employee and independent contractor. So that just happened today, and they're trying to come up with shortcut rules. Because right now there's a common law test and so forth. Reasonable basis test, meaning does another company classify this type of person as employee or independent contractor, and you can rely on that for your decision. This is getting more and more focus. Of course, they want to default to employee. ACA, people think ACA is gone. It's not gone. The 1095s are still required to the employee. The employee mandate is gone, but the employer mandate is not. They did extend it again from January 31st now to March 2nd. Don't file paper because that's really strange because you got to file the paper before you have to give it to the employee. There are states that require 1095 reporting now. New Jersey and DC, California, Rhode Island, and Vermont are going to mandate them for this current tax year, but they don't have a date yet when the form has to be submitted. Most of the states are allowing you to just send a 1095. I can tell you Vermont is not. They're going to have their own form, and more states are going to be jumping on this, and just have to wait and see. But again, I mean, so the employee mandate's gone. So the employee doesn't have to have health insurance. They're not going to pay a penalty on their tax return. But the employer has to still send in the information to the government. Remember, those penalties are very high. Okay? The penalties are driving a lot of this. Fringe benefits, I always mention this with wrapping up. Last item. Cash and cash equivalents are always taxable. If you give a gift certificate to an employee, regardless of what it's for, unless it's linked to service and safety awards, which has its own special exemptions, it's taxable. So Thanksgiving, give the real turkey to the person. Okay? Frozen, fresh, or alive. Give them a gift certificate to go to the store to buy it, taxable. That item has to carry value in itself, and while you can eat a gift certificate, that doesn't count. Okay? Everything else really stays the same with fringe benefits. Just make sure you tax it. And that ends the formal presentation. Again, my slides are available and updated on my website. Everybody have a great end of year. Enjoy your holidays. Let's hope we eventually go back to normal. And I hope to see everybody in person next year. And I'm always around in case anybody needs me. Thank you very much, and have a great rest of the day.